I want to welcome in Kevin Green, senior markets correspondent, to help kind of set up the action for today. KG, you warned about this yesterday's session during our show yesterday, and kind of what to expect. You talked about the levels to watch out for on the S&P 500. We broke through like level after level. It was like, we hit that 5,700, then we hit 5,600 at one point, although we finished off of that. I'm not going to get your levels yet. I'm going to go for that. But let's talk a little bit about, some of the perspective that we're getting out of the banks in terms of their views. It seems like they're becoming less constructive. You got Citi lowering their outlook on markets. Talk to me a little bit about that first.
Yeah, we're seeing Citi and Goldman actually reducing their outlook when it comes to the U.S. markets here. For Goldman Sachs, they did lower the U.S. GDP forecast for 2025. Now they revised it down to 1.7% for GDP. That's down from 2.4% here. And this is actually the first time that we've seen Goldman have a forecast that's below consensus expectations for over about 2.5 years. So it's kind of a big deal. They're usually more optimistic when it comes to the market just in general. Obviously, they're highlighting the tariff policy and the fact that they could actually obviously raise prices when it comes to consumers, as well as potentially tightening financial conditions just in general here. Now, one thing that they kind of note, and I think it's a very big important item here, is that they also are stating that they may the U.S. government may misinterpret some of the taxes that Europeans charge on U.S. goods, and that misinterpretation could also then raise tariffs even higher than what they probably should be, just given the commentary coming from the White House, that VAT tax, if you will. So once again, kind of interesting to see this revision to the downside. We also have Citi downgrading the U.S. stocks right now and actually getting a little bit more optimistic when it comes to China equities as well as European equities, kind of stating the same thing here. They believe that at the end of the day, the tariff policy is going to have a negative impact when it comes to the U.S. economy, and that there might be some bright spots overseas. And we're seeing that with the price action for a lot of the indexes, especially if we're looking at Germany for that matter. And if we are going to see this turnaround when it comes to defense spending and a removal of their so-called cap when it comes to spending, that could be a tailwind for a lot of those European countries.
Okay, so it seems like this is all about tariffs and the tariff impacts from both of these views, especially Goldman in particular, right? Was there anything else that stood out to you from either of these shifts in outlook for either Goldman or Citigroup as it relates to U.S. markets or the U.S. economy?
Well, it's also going to be the job cuts as well. I think that's the really big murky, picture or a landscape that we have here in the United States. We know about the DOGE cuts, and it's not so much the amount of jobs that are going to be lost by the government, but also those that are government contractors. And there's studies out there that say that there's 2 contractors for every 1 employee for the U.S. government. So if we do see a massive amount of layoffs or reduction in staff for the government, what is that going to mean for the private sector? And that's really what we're kind of focusing on when it comes to the labor market statistics, not so much the government layoffs, because those actually could take a little bit of time just based on the severance packages that are out there. But what are we seeing from the private side, the side of the economy here? And that should have an immediate impact when it comes to unemployment rates, participation rates, as well as the initial claims that we get on a week-by-week basis.
KG, I want to ask you, the VIX surged yesterday. It is, it looks like it's little change right now, but it is above 27. What's your read through on that? What does that tell us about where, volatility is now?
Yeah, there's still some near-term uncertainty when it comes to the market. I kind of focus on the backwardation or the mispricing or the differential in pricing between the VIX itself, VIX, minus the front month contracts, or even looking at the VIX futures. And so near term, we still have some headwinds here, and the market is reflecting that when you're seeing these intraday moves, especially this aggressive selling to the downside here. And I do suspect that we probably won't see the VIX kind of make a meaningful move to the downside until we start getting liquidity coming back in the market. And we're not getting liquidity. That's also kind of driving this erratic price behavior here for now. And the last thing too is just the incremental step up in the volatility index itself. That's something that usually does not happen. Usually we have a one-off event, we see the VIX spike and then slowly come down. But over the last week and a half, we kind of seen the VIX kind of inch up day by day. And that's just something that's a little bit abnormal here. So I would continue to expect just greater volatility in the market. And right now, any type of pop has been sold off right now. We just haven't been able to hold any bids in the market.
Yeah, I know. I was talking to some of the guys on the floor, and they said really watch around 2:30 when the margin calls come in. And, the market did manage to come off the lows of the session. Yesterday, I know you said 5,600 was a key support level to watch. What's the level today for support and resistance?
Yeah, so what I'm keeping my eye out on for today to the upside, 57.55, and that's actually going to be very critical. If we can actually engulf the candle from yesterday, or that would actually maybe change sentiment a little bit. And then to the downside, 55.50. So still a very wide range. I mean, these is kind of abnormal ranges that we're putting out every single day here.
Yeah.
But for the most part, we have seen realized vol actually kind of hit these levels here. And I would just say be very cautious about any of these pops for right now, even if we have a correction happening, or if we are getting into bear market territory or bear market environment. That does not mean that we can't have counter rallies for 2 days, 3 days, or even a week, even a month for that matter. So you got to be very tactical when it comes to your positioning, and be very nimble when it comes to this market, because things can change on a dime.
That's a great point. And it seems like it was just the worries about the R word, recession, kind of really sending that cold draft across the markets. I want to get into one mover that we're really paying attention to, Delta Airlines, under heavy pressure this morning. What's triggering this, KG?
Yeah, Delta is down around 7% in pre-market trading. Actually, yesterday was also down about 5%. A lot of the airline companies have seen a significant sell-off to the downside here, but you're starting to get update of guidance from a lot of these companies here. So that's probably going to be one of the main headlines for today. But Delta did lower its profit as well as revenue forecast for now, reducing the Q1 forecast due to weaker domestic travel here. Now, they did keep intact their full year guidance. They believe that this might be a little bit of a blip on the radar here, but once again, this is a situation where they are expecting top line growth to actually slow. Now they're seeing growth between 3 to 4% on a year-over-year basis. Previously, their guidance was for 7 to 9%, and the adjusted earnings per share was cut to 30 cents to 50 cents. That's the range that they have now. Previously, it was 70 cents to $1. So unfortunately, they are seeing a little bit of a change when it comes to consumers, not only on the leisure side, but also on business travel as well. So, you're just getting companies across the board in different industries really dampening down their guidance, being a little bit more conservative. And the airline companies, unfortunately, they're one of the ones that are kind of notorious for giving really strong guidance at their earnings announcement and then revising it 4 weeks, 5 weeks later down. And unfortunately, it seems like this is kind of the same trend that we've seen pretty much since COVID.
All right. Thanks a ton, KG, for the setup for today. There's the broad market action and the insight into the moves with Delta Airlines.